at the end of the day, we know that they're going to print money to save the banking system. We just don't
Yeah.
know when it's going to happen, and then what the program is going to look like. They're not going to call it quantitative easing, or not going to call this thing that they called it before, because that's politically not suitable. They'll come up with a new alphabet letter name for it. And, people like me and others will say, oh, actually, guess what, guys? Like, if you really look at it, how it works, it's printing money. And I think Bitcoin is very attuned to that. So the more stress that we see in the US financial system, the more that Bitcoin is going to preempt the move of money printing. Crypto is the antithesis to the TradFi system. When printed money happens and you debase, the value of time and human labor, we rejoice and we say, great, fuck you, we're going to take Bitcoin to 1 million.
Arthur Hayes, former CEO and co-founder of cryptocurrency exchange BitMEX, has again doubled down on his $1 million price prediction for Bitcoin, the world's leading cryptocurrency by market cap. According to the American entrepreneur, who has been reported as being the youngest African-American crypto billionaire in history, many factors are aligning to easily take Bitcoin to new all-time highs in 2024. In addition to crypto fundamentals like the 2024 Bitcoin halving event, Arthur is also extremely bullish about how unfolding macro factors will impact Bitcoin prices in 2024 and beyond. Arthur is especially concerned about the overall health of the US banking industry. During a recent interview with the Coin Bureau, Arthur explains that a huge storm is brewing above the banking industry. When it hits, the impact would be so severe that it would cause a multi-trillion-dollar collapse that could significantly impact other sectors and the overall US economy. This impending crisis threatens the $20 trillion commercial real estate market, which is largely supported by regional banks. The CRE is currently facing the double threat of high interest rates and even higher vacancy rates, spurred by the increasing popularity of remote jobs. With this important industry under threat, property owners are abandoning multi-million-dollar projects, leaving a heavy burden on already embattled regional banks. According to Arthur, when the storm hits, the Federal Reserve will be forced to rescue the banks by printing hundreds of billions of dollars. While thoughts of further monetary debasement sound like a nightmare, Arthur predicts it will be the opposite for crypto investors. He believes it will be cause for celebration and could easily take Bitcoin to new all-time highs in 2024. Arthur's ultra-bullish target for the leading crypto asset is $1 million. We will now bring you clips from Arthur's interview as he discusses the possibility of an impending crisis and how assets like Bitcoin and other cryptocurrencies will perform during the crisis. For more videos like this, please subscribe to the channel, turn on post notifications, and give this video a thumbs up. Thanks, and enjoy the video.
There's a particular company called Castle in the US, and they do scans of office key cards. And there's an index, and it shows basically about, in the major metropolitan markets in the United States, 50% of people are back into the office. So that means that office buildings are utilized 50% less. And so in a theoretical perspective, I mean, like, an office building is only valuable because people go into it. And so you think, oh, well, certainly these things should be worth a lot less money than what they were marked at in 2019. And that's the issue. All these banks loaded into this group of like super safe US commercial real estate, because people go to the office, they spend a lot of money, they have good tenants, blah, 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 in the prime markets. And then half the people decided they don't need to come in the office anymore, and these things are worth less. Now, is it a 20% decline, 30%, 40%? I don't really know. There's some selected transactions that are, down a lot. And the problem is these banks have these loans, and they don't want to recognize these losses, because if you recognize a 50% hit on an asset class, that's a few $1 trillion collectively across many U.S. large and small banks. Essentially, the U.S. banking system's insolvent. But again, we don't have a lot of transactions because there's not an incentive to trade. People buying office buildings are like, well, hello, like, half your people don't come into work anymore. I'm not paying that price. The seller's like, holy shit, if I mark this down to what it's worth, a lot of other things happen in my business that I don't want to have happen, which is basically I'm a bankrupt company, and then I need to either like talk to the regulators or do some sort of disclosures. So nobody's trading these commercial real estate. So as we start seeing, a bank like New York Community Bank shock the market by saying, guess what? We think we have to provision 10 times more money for the commercial real estate on our books. And it was only 2 loans. It was a $50 million provision in I think Q3, and went up to $500 million in Q4 on 2 loans that they had on their books. And then all of a sudden people, hold on a second. Who else has this commercial real estate problem? And the answer is everybody does. Now, in the US, there's 8 banks that are deemed basically nationalized, like a JP Morgan, a Citibank, a Goldman Sachs, Morgan Stanley, Bank of America. These banks are not allowed to fail. They're deemed too big to fail. They have deposit insurance, meaning if you put infinite amount of money in their bank, the U.S. government guarantees the deposits. And so these banks are fine. They could have as much commercial real estate as they want, because at the end of the day, even if it's worth zero, if you walk to the JP Morgan branch and say, I want all my money and it's $1 million, the government will come in and give JP Morgan $1 million to give back to you. And so you're cool. So that's not the problem. The problem is every other bank that's not top 8, thousands of other banks that have trillions of US dollars worth of commercial real estate. And they're all like, oh shit, if the market ever figures out that, these assets aren't worth what we say they're worth, then if I don't have an insured deposit, then I'm going to move my money out of the bank. And so that's the fear, is that if people start to realize, like, well, how much commercial real estate does my shitty little bank have? Maybe I should take my money out and give it to JP Morgan. And so what you're going to have is a sucking of assets from the small banks in the US to the large banks in the US. And at a certain point, that becomes a problem, because the US government hasn't said that they've guaranteed all these deposits. And so you could have this multi-trillion-dollar banking crisis. Now, that's all well and good. We're not there yet. The question is, okay, is New York Community Bank, still, I don't know, 60-something% in the last week and a half. Are they the first or the last? I think they're going to be allowed to fail. I think that once they're allowed to fail, and maybe that happens in a week or 3 weeks or whatever it is, then the crisis spreads to larger banks. And at a certain point, it gets politically unpalatable for the Fed to allow a very substantial, non-too big to fail bank to fail. And at that point, they start printing money again. And so I think that coincides sometime in the March timeframe. For whatever reason, financial crises, we like to have them in, January to March and October to November. It fits for the timing. We're 1 year after the first scare, which is the U.S. Treasury market, and the U.S. government came in and did they guaranteed every U.S. Treasury and mortgage-backed security held in any U.S. or branch of U.S. branch bank, and that's $4 trillion-ish kind of potential money printing exercise.
With the impending crisis, Arthur warns that it is almost certain that the Federal Reserve will announce another funding program to bail out banks, especially if a bigger bank is threatened. Despite the Fed's insistence that it would not come to the rescue, there are many examples of it doing exactly that once the too-big-to-fail banks are even remotely threatened. In recent posts on X, Arthur brilliantly sums up the situation and how it will impact the cryptocurrency market. His first post reads, "Who cares about Fed rate cuts? When you combine Fed and Treasury activities, the net is an injection of $21 billion per month. This is one reason why tech, artificial intelligence, and crypto are pumping and will continue to pump. Fuck the physical economy. It's all about the online economy." In another post, Arthur reveals that he's putting some James Brown on and looking at his portfolio. "Get up, get on up," he adds optimistically. "Bitcoin to $1 million. Let's get back to the interview as Arthur talks about spot Bitcoin ETFs and the possibility that we could be killing Bitcoin by opening the doors to traditional finance players like BlackRock and Fidelity.
I think it's a great thing that we've created this new financial system, and for 15 years, it was ignored. The Winklevi twins filed their first ETF application in 2013.
Yeah.
I don't even know if they got one in the end. 10 years later, Larry Fink files his in June of 2023. 6 months later, he gets an ETF, right? And so that tells you all you need to know about what this ETF is and who is behind it. Is it a crypto native thing to help expand the financial freedom of the world? Absolutely not. Is it a way to sequester fiat dollars that want to earn a return in fiat using what they think is new technology? Absolutely. It's a trading product. It makes fees for BlackRock and Fidelity and all the other major asset managers who've scooped up. I mean, you probably know the numbers better than me, however many billions in AUM over the last 4 weeks or so.
Yeah.
So it's been the most successful ETF launch in capital markets history. That should also tell you what is the problem that it's supposedly trying to solve, which is a global race to how much money can we print. And it's not an American issue, it's not a China issue. It's everybody's doing the same thing at the same time. And this is just one way for the authorities to try to control where that fiat goes. Because if you actually buy real Bitcoin, then it's out of their purview. But if you buy a BlackRock or a China AMC ETF, perfectly within their view to see what's going on, who owns what, and make sure that when the time comes, that money is subject to taxation via inflation as well.
Is there a risk that we're killing Bitcoin with the surge of traffic for spot Bitcoin ETFs, institutional demand coming through? Is Bitcoin still the money of the people?
I think so. And again, I don't think the response, if you're afraid of BlackRock and some of these other managers, is to say we need to ban them from owning Bitcoin. That's not how Bitcoin works. It's a permissionless system. Anyone who wants to own it for any purpose is allowed to do so. If we want to maintain the progress of super hard crypto money, then we're going to have to become active. The best part about owning Bitcoin and why the community is so strong is because people care about it and they do things. Now, BlackRock is a apathetic money manager. They don't do anything. They collect assets and charge a fee and sit on them. They're passive. So they're not going to do good things and they're not going to do bad things. But they're not going to have Bitcoin move out of their custody. Unless, and maybe there's some bond or something they buy, I doubt it. But that Bitcoin is just going to sit there. So the more Bitcoin they accumulate, the more Bitcoin that's never going to move and never going to do anything. Obviously the large whales in Bitcoin, they're not spending money all the time, but if you take a look at what the investments of people like Roger Ver and the Winklevi and some of the other large Bitcoin holders were doing back 10 years ago, they were investing in companies, giving people Bitcoin to build services to create an ecosystem that made the Bitcoin that they still retain more valuable. Is BlackRock going to do that? Absolutely not. They're going to sit on the Bitcoin and charge a management fee. So it's the same problem with capital markets where passive index investing is killing price discovery, because you invest in a company, you invest in an index, and the index invests in the highest valued stock, whether or not that stock earns its rate of return. Similar things could happen with Bitcoin. It's up to us to actually do stuff with the network and things like ordinals, where people are, bringing JPEGs to Bitcoin. I think it's a great thing. I know some people think it's trash that's on the blockchain, but at least we're using it. If ordinals are the only thing that keeps people using Bitcoin and spending Bitcoin, that's the best thing, because now we have the miners have income in Bitcoin for people using the network that they're there to upkeep, versus BlackRock and other asset managers. All they want to do is sit on assets and charge a fee.
When asked about other cryptocurrencies he's bullish on for the 2024 bull market, Arthur mentions Solana, not necessarily because of the network's strength, but because of market sentiments. According to Arthur, people love and hate Solana, and they love to trade it. As a result, Arthur believes he can make a lot of money by trading people's emotions with crypto assets like Solana. Arthur is also bullish on meme coins like Dogwifat, which he predicts will be the best dog money of this bull cycle, and Pepe. What are your thoughts on the interview? Arthur is certain that the Fed may print more money to save the banks, which means further currency debasement and more reasons for investors to buy Bitcoin. Please drop your comments and observations in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos. Thanks for watching.